Before you step into 2026, make sure these 2025 myths aren't the reason you miss your chance to invest. All right, without wasting a second, let's jump straight into the infamous top 10 stock market myths. Number 10. Let's start with the fantasy we all secretly wish was true. That one stock pick, one lucky trade, will make you a millionaire overnight. Sounds exciting, right? Almost too exciting to be real. But here's the brutal truth. Fast riches are usually fast losses, and fast losses can wipe you out. Remember GameStop? That wild ride everyone was talking about? A handful of people walked away with fortunes, but thousands more bought too late, held too long, and lost it all. Real wealth isn't a lottery ticket. It's slow, steady, built through years of patience, consistency, and compounding. So the myth is, get rich overnight. And if that shocked you, just wait until you hear the next one. Number 9, here's a shiny myth that returns every hype season: IPOs. The second a company goes public, investors rush in like it's free money. But watch closely, really closely. Some initial public offerings, yes, Facebook exploded. Others, WeWork, Paydium, total wipeouts. And the reality? It's simple but often ignored. An IPO isn't a golden ticket. It's just a business stepping onto the stage, and most stumble before they ever shine. So the myth is, IPOs guarantee big profits. And if you thought IPOs were risky, wait until you see what's next. Number 8, another popular myth: if you invest ethically, you'll earn less. Sounds logical, right? But in reality, many ESG funds focused on sustainability and good governance have matched or even beaten traditional investments. Why? Because companies that adapt to the future thrive in the future. Sustainable doesn't mean weak. It often means stronger, smarter, and more profitable. So the myth is, ESG means lower returns. And if that surprised you, the next myth might flip your view of the entire economy. By the way, if you're finding these myths eye-opening, this is exactly what we do here. We cut through the noise and bring you the truth about money and investing. So hit that like button, subscribe, and let's keep busting these myths together. Number 7. Here's one that fools even the smartest people. They say the stock market is the economy. But let's rewind to 2020. Jobs vanished, businesses collapsed, headlines screamed crisis. And yet, the stock market, it roared back to record highs. Why? Because the market doesn't price today. It looks ahead, always ahead. It prices tomorrow. That's why markets often rise in bad times and fall in good times. Confusing? Absolutely. But it's the truth. So the myth is, the market equals the economy. And if you think that's confusing, wait until you hear the myth about technology. Number 6. Right now, the whispers are everywhere. People say artificial intelligence, AI, is just a bubble, just like .com. Yes, some hype will pop, but here's the twist. Not every balloon bursts. Back in 2000, they said Amazon was a bubble. Fast forward, Amazon runs global retail and half the internet. So what about AI? Some names will crash, sure, but others? They'll define the next decade. Not every balloon pops. Some defy gravity, some become rockets. So the myth is, AI and tech stocks are just a bubble? And if that blew your mind, the next myth is all about your cash. Number 5. This myth has trapped millions for decades, that stocks are dangerous and cash is safe. Stocks crash, red charts, doom headlines. It feels risky. But here's the shocking truth. In every 20-year stretch of U.S. history, stocks delivered positive returns. Every single time. Cash, meanwhile, quietly loses value to inflation. So ask yourself, really ask yourself, what's the real risk? Owning stocks that grow or watching your cash rot away? So the myth is, the market is too risky, better to keep cash. And if you think cash is safe, the next myth will prove knowledge is power. Number 4, here's a myth Wall Street loves, that only experts can beat the market. But reality check. Over 80% of professional fund managers can't even outperform a simple index fund. Think about that. With all their research, degrees, and billions of dollars, most still lose to ordinary investors who just buy and hold the S&P 500. You don't need to outsmart the market. You just need to stay in it. You just need the patience to stay in it. So the myth is, only experts can win. But if you think experts always know best, wait until you hear this next myth. Number 3. Now this one ruins more investors than crashes ever could. I'll wait for the dip. Buy at the bottom. Sounds genius. Feels safe. But here's the problem. You never know where the bottom is until it's gone. In 2020, countless investors sat out, waiting for the perfect moment. By the time they felt safe, the rebound had already taken off. Even hedge funds get timing wrong. So what chance does the average investor have? And the truth? Time in the market always beats timing the market. So the myth is, you can time the market. And if you think timing is everything, the next myth proves starting is everything. Number 2, this one stops more people than anything else. The belief that you need to be rich before you can invest. Maybe that was true decades ago, but today, fractional shares changed everything. You can buy Apple or Tesla for the price of a coffee. You don't wait until you're wealthy to invest. You invest, and that's how you build wealth. The real mistake? Waiting, hesitating, letting time slip away. So the myth is, you need to be rich to invest. So those are 9 of the biggest stock market myths people still fall for. Which ones did you believe? Drop your thoughts in the comments. And don't forget to subscribe if you want more straight talk about money and investing. All right, let's end with the most damaging myth of them all. Number 1, and here it is. The myth that keeps countless people from ever starting. The idea that investing is just gambling. At a casino, chance decides your fate. The house has the edge, and most walk away empty-handed. Investing? It's completely different. When you buy stock, you own part of a real business. If you own Starbucks, every latte sold adds value to your pocket. That's not chance. That's ownership. Real ownership. The truth is, the real gamble isn't investing. The real gamble is staying out of the market. So the myth is, investing is just gambling.